The growing conflict between the United States, Israel, and Iran is not just a political crisis. It could also become a major financial shock for the global economy. Whenever tensions rise in the Middle East, two markets react almost immediately: oil markets and stock markets. One of the most critical reasons for this reaction is the Strait of Hormuz, a narrow waterway between Iran and Oman, through which nearly 20% of the world's oil supply travels every day. If military conflict threatens this route, global oil traders immediately begin pricing in the risk that supply could be disrupted. When supply becomes uncertain, oil prices tend to rise quickly, sometimes within hours, because energy markets operate largely on expectations rather than reality. If investors believe that shipping lanes could be blocked or energy infrastructure could be attacked, they start buying oil futures contracts, which pushes prices higher. This extra price increase is known as a risk premium, meaning traders are paying more today because they fear oil could become scarce tomorrow. At the same time, global stock markets also react strongly to geopolitical tensions. Major indexes like the S&P 500, the NASDAQ Composite, and the Dow Jones Industrial Average often experience volatility because financial markets dislike uncertainty. During periods of conflict, many investors sell risky assets and move their money into safer investments such as government bonds, the US dollar, or gold, which has historically been seen as a store of value during crises. However, not every sector suffers during war. Defense companies like Lockheed Martin, Raytheon Technologies, and Northrop Grumman sometimes benefit because governments increase military spending when conflicts escalate. The real global risk appears if the war spreads across the region and disrupts energy supply. Higher oil prices increase transportation and manufacturing costs, which can push inflation higher and slow economic growth. That is why investors around the world closely watch tensions in the Middle East, because what begins as a regional conflict can quickly evolve into a global economic shock affecting markets across the entire world.